What is up? This is the Working Investor. In this video, we're going to review BEGS, ticker symbol BEGS, not begging on the street. And what exactly is going on with this fund? How is this thing a beast and outperforming many major indexes out there that I compare? We're going to talk about the good, the bad, the ugly, and what this portfolio is comprised of. As always, nothing here is financial, tax, legal advice, or any sort of advice. This is purely for fun and entertainment purposes only. Please see all my disclaimer. So BEGS is another one of those funds which I call stacked risk parity. I mean, you can also look at it as a leveraged position, but a leveraged position for me means that you have more exposure of the same underlier, which means you have more risk in the same department. But this is basically, they call it a 2x bull, but basically they're giving you 200% exposure, hence it's 2x. But the exposure is not doubling down on the same thing. It's diversifying it out with things that don't perfectly correlate. And there are 4 assets that comprise this thing. So you have to subdivide it into 2 portions. So you want to look at BEGS that there's part A and part B. Part A is the first 100% exposure, and that's Bitcoin, that's crypto exposure. And they break it down where 75% of the crypto exposure component is BTC, not exactly BTC, but whatever equivalents they have. And then 25% exposure is in the Ethereum, whatever, way they build that up. So that's how you get 100% in crypto. The other 100% exposure, which makes it 2x, is broken down also 75% gold and then 25% silver. I was wondering why they don't do 50-50. So I remember I was looking up on YouTube. I think it was a manager that explained that basically Ethereum is 3 times more volatile than Bitcoin in general. And silver is 3 times more volatile than gold in general. Hence, they want to have the notional volatility of each thing. So they have, they basically have 25% silver because in the volatility of it, it'll equal around the same amount of volatility as gold. Same thing with Ethereum to Bitcoin. That's the reasoning why they don't do a perfect even split between dividing the precious metal commodity section in part B versus the cryptocurrency section in part A. I naturally have to compare this to a fund that I reviewed. It's called BTGD. BT is like Bitcoin, and think of GD like gold. And that's basically an even split, 200% exposure. So it's leveraged, but it's risk parity. It's stacked risk parity. And you have 100% exposure onto Bitcoin and then 100% exposure onto gold. I believe the way they comprise this is via swaps. So let's just take a look at the website. It's from Rareview Capital, not Rareview Mirror, but Rareview Capital. And you could see how they explain how they comprise it. It's a roughly 75-25 split, but they talk about there's some wiggle room. You could see here in their description. You can read their prospectus as well. They launched in 2025, so they've been around less than a year. They've been around for like 7-ish months, and they're still building up their net assets. They have a high expense ratio of 1.29%. It looks like they have a discount of 30 basis points, which brings it down to 99 basis points. And it looks like according to their website, the discount may apply until February 6, 2027 as of now, but I've seen places that they're flexible with that. So yeah, you can just go ahead and read all that. I'm going to show you a little overview of BTGD, and then we're going to look at how all these things perform. And I have made a whole video on BTGD, which I will link in my description. Oh, this contact us is so annoying. So basically, yeah, so that's 100% like we mentioned, 100% gold, 100% Bitcoin. There's no silver, no Ethereum. So if you want to get exposure to that stuff, that's where the beggar or the BEGS, they'll take your AUM, begging for your AUM. They should really change the name. But I think it's BEGS because it means Bitcoin is the B, E is for Ethereum, G is for gold, S is for silver. The idea is that precious metal commodities and cryptocurrencies do not, if you're worried about fiat currency going to trash or you're worried about inflation, these things tend to do good. But then precious metal commodities and cryptocurrencies, they're not they don't tend to be correlated to each other. So you have two uncorrelated assets in a way that you do a risk parity. So BTGD, you can see, has been around since October of 2024. So it's been around for like 11 months already. They have a lower expense ratio. It's 0.99%. That's not going to go up. I hope not. But of course, they can always. They have probably a little more AUMs. Here you can see some of their holdings. So you see they have GLDM. That's one of their ways how, or IBIT. You know, they have FBTC. They have all kinds of different ways how they have how they create this exposure. A lot of them, I don't think they do direct. I think they have these other proxies how they do these exposures. So let's go ahead and pull up the chart from February 7, 2025 to today to see how they all stacked up in total returns. I don't think they give dividends, but I always add that in there. I try to add that in there. So we're comparing basically BEGS to BTGD to GLD, which is gold, versus Bitcoin to US dollar, versus silver, versus Ethereum to US dollar. So you could see, and not just looking at the total, at the return, but also look at the volatility in the path. So you see BEGS is 54% since in about 7 months. BTGD is 42%, a little more than 42% in 7 months. So it's the second runner up. Definitely both of them beat gold, which is 28%. Both of them beat Bitcoin momentum, which is almost 20%. Both of them beat silver, which is around 34.5%. And then, but Ethereum has been up 70%. So it's the only one that beat all of them. But if you look at Ethereum, look how wild this roller coaster ride is. It's, you know, do you want to take that kind of volatility? So, you know, and it has its own market cycles. So you're not just an Ethereum. Okay, now look at silver. Now, actually, before we get to silver, look at Ethereum and I want to show you the difference in volatility between Ethereum and gold and Bitcoin. Look, you see how smooth Bitcoin is compared to the crazy swings of Ethereum. Hence, BEGS only has 25% of Ethereum because it's so volatile. But silver and gold seemed not as different. You can see a little bumpy ride with silver. Let's compare that to gold. Look at their volatility. It's also bumpy, but it seems a lot smoother. You really have to zero in on it, but you definitely could see there is a little bit more smoothness, I would say. Maybe I'm not looking at it correctly with the pattern. But then if you look at, I have a question for you guys. Between BEGS and BTGD, which one do you think is smoother? So if you guys didn't guess it by now, I'm sure you guys figured out that BEGS is going to be more bumpy versus BTGD should be a little bit less volatile because BEGS has that Ethereum and it has that silver in there. So the question you want to ask yourself is, and I also want to see how these things work in a larger cycle. Do you want to have just gold and Bitcoin, which is like, you know, Bitcoin is the digital gold and gold is the most precious metal. Well, it's not the most precious metal, but it is a precious metal commodity. It's not the rarest metal, I would say. Or do you want to have, you know, the number one and number two of each? Because, you know, people would argue and say, some people argue and say that Ethereum is the number two cryptocurrency after Bitcoin. I'm sure there is a lot of debate going on. And a lot of people will argue that silver is the second top precious metal commodity. So do you want to have number one and number two and be a little more diversified? Or you want to stick with the most, you know, the top ones? So that's a question you want to ask yourself. And you can see the performance has been pretty good. But again, that's because Ethereum has been rocking and rolling pretty well. Let me know what you guys think between these two assets. Which one do you think is a better approach for your portfolio and your style? This is the Working Investor over and out. I hope you guys have a wonderful trading week. All the best. Be well.